What up, what up? Good morning. So in this video, I want to go through some of the hidden messages from yesterday's FOMC meeting. I want to go through my portfolio picks, why I chose them, why I'm confident in them and can sleep well at night, and let's just get it started. Jerome Powell came out the day after the inflation reading came down. And of course, like I said in yesterday's video, before he had come out, I said that the rhetoric would come out hawkish because his job is to lower inflation. He does not want the stock market to rally, but the data does show that the Fed rate hikes have been working and inflation is coming down, and a lot of stocks are moving up. It's showing on the indexes, it's showing in certain stocks, sectors, and industry groups, and these are the picks that I am comfortable with, that I already have, and that I will add more if needed. But right now I feel extremely safe because if you understand all four market phases, the accumulation phase, phase 1, the participation phase, phase 2, the distribution phase, phase 3, and the bear market or downside phase, phase 4, which we are in and some are coming out of. To find leadership in an industry group or a sector, the price action needs to go above the 200, and you start coming out of only technical trader style market into a technical and fundamentally driven marketplace again. So these picks are intelligent picks for multiple reasons. None of them will go bankrupt. During the consolidation phase where companies buy other companies, these ones will be the ones buying other companies, not being bought up if there is an M&A. And fundamentally, they are proven to grow, and there is a mix of dividends in there. They are expensive stocks. Most of them are Dow stocks, and safety is on my mind. So I'm going to only look at the dailies because we're not trading. This is for investment and hodl for me. You're welcome to copy them. You're welcome to, think about it. You don't have to do anything. I'm just sharing what I have done. So going around the different sectors and industry groups, I'll just go from top to bottom. Okay, first up is Pfizer. Pfizer is a household name. It's not going bankrupt. They have many revenue streams. And as you can see, it has the Jedi green lights. This is blue, so you can be in. You are in phase 1 above the 200. Okay, you are breaking out from a pivot high. And last time that it went below the 200 and all these things happened, this is what happened until it got to the distribution phase. And you can see our Jedi green lights went pink, and that went pink, and you would have sold at the very top here at 58.53. Its low was down here at 41.52. And I basically, all these that I'm going to show you, I bought pretty darn close to the low, and I'm up on all of them. They're all in phase 1, the accumulation phase, and they're all safe. Safety is important for me because this is an investment portfolio. I want them in phase 1. I want them to be leaders. I want to see first stage bases. I want to see cup and handles. I want to see breakouts hold, and I want to see good fundamentals and technicals, and that's what comes in this list. So Pfizer is number 1. Number 2 is DocuSign. DocuSign is used with everybody. Okay, if you think about how many attorney firms or escrow offices or anybody that does business that needs to do contracts with each other, DocuSign is a subscription service. It is about 9-10x from where it's at, and it is a staple of the business world. It had an all-time high over here at 315. It's currently at 59.24. We got ours down in the $45 range, $46 range. It is up. It is still in phase 4, but you can see it is heading up. The sync system says go. If we just were to back it up to the hour, you can see it's got massive momentum. DocuSign is a good one, helps me sleep well at night, and it's a little diversification. The third one is Johnson & Johnson, and you could see this dotted orange line, and that's where I got picked up. And you could see I had it plotted out just a little bit above its low so that if it went back down and hit it, I'd get picked up, and I did. And I've been holding ever since, and now it's above the 200. It has the Jedi green lights, and it's running. It had an all-time high of 186.69. It's not that far from its all-time high. It's only $10 below, and it has a great dividend, okay? The next one is Home Depot. And Home Depot is not only a very safe company, a very good company, a very big company that's not going bankrupt, but it is also in phase one, showing leadership in its sector, and it's stable. And portfolio managers and big money are going to want stability. They're going to want safety. They're going to want moats, revenue streams, fundamentals. They're going to want good technicals, and they're going to want leadership. And to see these breakouts hold, this had a high of 421 or so, and we're at 333. Again, I got mine on this yellow line. It triple bottomed and took off. I made a lot of videos about it. I'm very happy to have Home Depot, and it also has a dividend. So you're getting some money there. You are in the accumulation phase. You are showing strength just like the other ones, and it's very safe for the investment. You can't have a good investment HODL portfolio without Microsoft. It's very, very rare that Microsoft comes down this much. And I didn't get it at the, I did buy some down here at the 213, and I got some at like 225, and it's doing good. And right now it's at the 200. You can see right here, it's at the 200, and it is going up. Now, big tech goes up when inflation comes down. We've had 2 inflation reports that have come down. Therefore, as long as those rate hikes keep working, which they should, because it takes 6 to 9 months for them to work on inflation. And the October read, which was the November, they read it in November, that was month 8. And the December 13th read, which showed November, which was the second CPI or inflation data that came down, was the November read. And so these ones are showing leadership, and they found their bottom, broke out, and now they're either in phase one or just about to enter phase one. And Microsoft and Apple are both two that all mutual funds and big portfolio investment firms have because of the weighting in the indexes, and you can't really beat the S&P unless you have Microsoft and Apple. So Microsoft is a must-have. Next, I know it's not sexy, but it doesn't have to be. Boring is okay when it comes to safety and investment HODL portfolios. Now, McDonald's, I've been saying it for quite some time, 6-7 months, that Walmart and McDonald's did extremely well in the financial crisis. There's a reason why. People were losing their homes, they were going bankrupt, they were losing their job, they were out of money, there was a high unemployment, and they had to feed their kids and themselves, and they sold a lot of Happy Meals back in the day, and a lot of people went to Walmart because the prices were good. So McDonald's is not just a leader, but it's actually broken out of its all-time high. Found a bottom, okay? Made a higher low, made another higher low, which it established, and that's, I believe, where I bought it. And now it's going up. It's above the 200. The Jedi green lights is on, and it's just been going up and up and up. Lately, it's been going sideways, but it actually broke out of its all-time high and retested it, okay? And this thing just went blue while this is still green. So this thing is already in a bull run. That's McDonald's. Next is Coca Cola. Everybody knows Coca Cola. It's a staple, and everybody drinks Coke. And, it's got a great dividend, and it's simply in phase one. It's in the accumulation phase, not far from its all-time high, and it's a consumer staple. So people are going to always drink soda, even in a recession, whether they go to McDonald's to get it or they buy it for their household. And a lot of these are not only great companies that won't go bankrupt and are safe, and smart money is going to want them, and you as retail, want all those same things, but since they're going to buy it, it's going to push up because of the safety factor. And then getting that dividend is incredible as well. So Coca Cola is in there. Next is this one. It's called UTSL, and it's basically a utility play. It's just an anchor in the portfolio. You can see it's above the 200. It also has the Jedi green lights on the daily. It simply is a defensive stock. People are going to pay their water. They are going to pay their electric bill. They may get rid of things like subscriptions or any extras that they may not need, but they will keep their lights on. They will pay their water, and utilities is just a good one to have in there. Now, this next one has been beaten down really bad, and they didn't have the best earnings last time, but I'll tell you what, anytime one of these picks doesn't have a good earnings and you know that it's going to be a leader or in high demand in an industry group like CrowdStrike, which is in cybersecurity with all the hacking and all the internet spammers and just all the defensive stuff going on constantly in the world, a company like CrowdStrike is very smart to have in your portfolio because cybersecurity is necessary and will be in demand. So these are good times to, if you have high conviction in something like this, like I do, to accumulate it and just hold. Cybersecurity is mandatory, I think, at this point in a HODL portfolio. It's down low. It's still in the bear phase. However, it is, if you notice where the dotted blue lines are, it's basically right above an old pivot low and right above a peak. So I bought some yesterday, and I had already bought 2 times prior, and I will buy more if needed, but I'm really happy to have CrowdStrike. Okay, next is Bitcoin. You got to have Bitcoin. Even if you put 1% of your money in Bitcoin, that 1% might in the future trump 99% of all of your money. It's not a bad idea to have 1% in all of these if you could, but having a little Bitcoin be due to supply and demand, not having anybody at the top, because Satoshi was smart enough to remove himself from leadership and stay anonymous. It has so much less vulnerabilities, and due to the supply and demand, the decentralized nature of everything to do with Bitcoin, and of course the blockchains, which all the computers verify, and it's much easier to hack one computer versus hacking 10,000 different computers. And that's why the blockchain is so important. And the reward is they get a Bitcoin if they verify the transaction, proof of work, right? So Bitcoin definitely makes the list. Okay, it's not sexy, it's kind of boring, but I tell you what, this company does amazing in recessions. It's Walmart. It had an all-time high just right here at 160.76, and just like the last recession, look at Walmart go. There's the Jedi green lights. This went blue. Means you could get it right here at 123. It's pretty much where I got it. And boom, it's over the 200. It's in a bull run. It's just doing its thing. Pretty soon it's going to break out an all-time high, just like McDonald's. Walmart's a go. Now, this one you can see the orange dotted line, and that's where I got picked up. This is Disney. I love Disney for the long term. Okay, you have the theme parks in different countries on different continents. Okay, they now have real estate. They have one of the best animation teams on the planet. They have Pixar Studios. They have movies, movie stars, Disney Plus. They have merchandise. People have children, and people love their children, and children love Disney cartoons and movies. They have that locked up. On top of that, they have the rights for LucasArts, Star Wars, and everything that goes along with that, and all the blockbuster Marvel hits. Disney is a no-brainer. Okay, the next one up, and I'm up $75 already on this from my alert. This is Adobe. Every billboard you see, every movie you see, every miniseries you see, every thumbnail, every graphic design, every magazine probably has somebody behind it that's using Adobe products. Adobe is massive in the creative world. It had an all-time high of basically $700. You could still get it at $341, which is a little bit more than 100% back to the all-time high. And Adobe is certainly making its move. There's my buy on the yellow line. I got picked up there, and I'm just holding, and it's on its way to come out of phase 4 and get into phase 1. And it's not going bankrupt, and it's safe, and it's a great company. Proud to own it. Okay, next up is Netflix. Now, Netflix is similar to Disney, except Disney has a lot more going on than Netflix. However, Netflix is showing more strength than Disney currently because they had huge subscriber growth earnings and overall good earnings. Now, it came down a lot. It was at an all-time high of 700 as well, like Adobe. And you see the yellow line where I got mine at one, mine's like 171, so about $5 higher than the bottom. And because of the earnings, it has just beautifully launched. And this is why fundamentals and technicals in the bear, bottoming process, boom, 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 buy after it's established, like I did, and then the fundamentals take you up, and now it's a leader. Netflix is really, really good right now, and if they continue in an acceleration phase on their earnings reports, Netflix should go back to all-time high and much further. Okay, this next one is beaten down, but I have a feeling we're at the low end of it. It's Amazon. The reason Amazon makes the list is because, unfortunately, like Walmart took out so much of middle America and all the mom and pop shops with the super Walmarts. You can buy, instead of going to a paint shop, you can go to Walmart. Instead of going to a tire shop, you can go to Walmart. Instead of going to a gun and ammo shop, you can go to Walmart. You want a fishing rod, you can go to Walmart. You want food, you can go to Walmart. They took out a lot of business. That's a different story. But we're in an age of millennials and Gen Z and convenience. And then after COVID, people really don't want to leave the house. And you can get just about anything you could ever think of as far as a product shipped direct to your door from Amazon. And I just want to show you something really quick that I haven't shown you in a video. But see right here where all these established little lines are at the low? It's also back here in the zone of this whole 2019 area. So you're getting 2019 prices on Amazon, and Amazon, Walmart, McDonald's, these will do really well in a recessionary environment and safe. Great price. Okay, next up is Chainlink. I am super bullish on Chainlink. It's my third favorite crypto. It's Bitcoin, Ethereum, Chainlink. It looks like it's going sideways, but if you notice, the 200 is coming down closer, and even though it's sideways, it's established its floor, and it's kind of like a blue chip, like a Microsoft. It's an anchor. What I like about Chainlink is it's easy to use their code. It's very safe and stable. It's decentralized. It's working with the Swift financial system. It already has the proof of reserves application built right in. So if people want to do what CZ of Binance had said with Merkle Tree proof of reserves, Chainlink already has that built in. They can simply just tie it right in and then show everybody. Chainlink moves slow, but it's safe, it's an anchor, and it's stable, and I love it. I know, you might think I'm a little crazy by saying this, but AT&T and a lot of really big investors buy AT&T because they have a great dividend yield. They own a ton of stuff. Their stock does not move. Don't expect to make a lot of money like a growth stock with AT&T, but that dividend is incredible and it just keeps on paying. So AT&T is a great one, a safe one, and a good dividend payout. And of course, you have to have Ethereum. Ethereum is the modern day DocuSign. Okay, it's for smart contracts. A lot of things are built on the Ethereum network, some using ERC20, but we all know Ethereum is something that we should have. And if you're going to choose crypto, your first couple should be Bitcoin and Ethereum. I am hugely bullish on Ethereum. I absolutely love it, and I'm super proud to own it. Next up is Apple. Apple has their own ecosystem. All their computers sync. Their silicon chip is sick. Everything I own is Apple. I love Apple, and they are very stable, a great anchor in your portfolio. It's not too far from all-time high. It's never done me wrong. I've been through multiple splits on it. It does have a small dividend. Apple definitely makes the long-term portfolio list. Okay, next up, going into a recession, gold is not a bad idea to own. I got this at 21. I'm almost up 100%. It's JNUG. It's triple leverage, and it is just about to cross over into phase one, signifying the accumulation phase and the beginning of a bull run. Now, this thing, has been way up here, $1,050, and right now it's at $37. So JNUG definitely makes the list. Gold, silver, those are not bad things to have going in a recession. Nvidia is already over the 200. It is an amazing company. Chips will be needed for phones, tablets, vehicles, Internet of Things, smart toasters, smart sprinklers, smart everything. Okay? Chips will be needed. Nvidia and AMD are leading the pack. Nvidia makes the list. And last but not least is Tesla. I've made a ton of money with Tesla. I am actually happy that it keeps going down because I look at it as opportunity, same as CrowdStrike. Sure, if Elon is distracted with Twitter, or he's putting some fear in investors that he's going to lose focus for Tesla, or releasing Twitter file information that threatens people that are in power. I get it. I definitely understand why it would make investors nervous. It makes me a little nervous. But Tesla is the leader of the electrification, the electric vehicle revolution. They have their own charging networks, working on autonomous level 5 driving. They have a semi-truck coming out. They have a Cybertruck coming out. And there's just so many good things about this company. And it will continue to be a leader in the electric vehicle evolution. So that's all I got for you. That's my portfolio picks. They're all measured around technicals, fundamentals. They're leaders. They're not going bankrupt. They are captains of industries, staples, big money, smart money, institutional money, pension funds, insurance funds, and hedge funds will pick these first. Us as retail get to benefit from that because they're stable and safe and have good fundamentals. The fact that most of them are showing that they're over the 200 is outstanding. There's only 3 of them in the whole list that aren't. Tesla is one of them. CrowdStrike is another. And I think DocuSign, which is almost about to cross. So that's all I got for you. Those are my picks. I hope you enjoyed the video. Don't forget to hit the like and the subscribe, and we will see you tomorrow.